Welcome back. Once again, I'm Scott Sturgeon with the Practice Management Group. Thank you so much for joining us for this session of the class. So I have Ed Sims, Vice President of Insurance Solutions for Mariner Wealth Advisors, here with me in the studio. We're going to be going into a little bit of an overview of what the Insurance Solutions Group is all about, how they work with advisors, and that sort of thing. Ed, thank you so much for joining us.
You're very welcome.
Great to have you here.
Look forward to it, yes.
Could you, just to start, I think it's helpful, in your own words, to give kind of an overview of what your team's kind of directive is or what you're all about?
Sure, absolutely. And before I jump into that, I just want to give a brief history on myself. I've been in the life insurance business for over 25 years. I started Mariner Insurance Resources, the insurance division of Mariner, back in 2009. So we've been doing this a little over 11 years. And it was the first advisory solutions part of the offering for the advisors. So that's just a kind of a quick background. So in terms of what we do and how we engage with advisors, I kind of want to just break it down into about 6 different areas of focus. The first area of focus is going to be income protection. So that has to do with, a premature death or a disability or anything like that. And then we also do asset protection planning for folks with like long-term care situations or want to plan for long-term care to protect assets down the road. The third is business planning for business owners that may need to work on their succession plan or funding buy-sell agreements, that type of thing. The fourth is legacy planning, which would be like wealth transfer planning and doing tax advantage strategies for estate planning and so forth. And the fifth strategy would be annuity planning. So we work with a lot of, guaranteeing a lot of lifetime income in situations where people already have annuities that they need to understand the impact of making a change to those annuities and so forth. And the last and final area of focus we have is the accumulation strategies regarding life insurance. So the tax-free accumulation, the tax-free distributions of income, from a life insurance policy.
You do it all.
Yes,
really.
We do.
I think we've talked before. There's a couple things you guys don't handle. Do you want to just maybe briefly look over those or touch on those?
Yeah, great point. So we don't do in-house property and casualty insurance, and we don't do in-house health insurance. So we have referral partners on a national basis for individual health care and like Medicare supplements, those type of things. And on the property casualty side, we leave that up to regional referral partners. So wherever your office is, likely is going to have a referral partner for your property and casualty situations.
Good. And could you maybe just give kind of an example? What would a typical engagement look like with a wealth advisor or with their team? Whether it's a prospect or a new client who you're bringing on and they have some sort of insurance need. What does that kind of look like?
To keep it really simple, from an income protection perspective, what we'll do is we'll help the advisor understand what the gaps are in the coverage that they may have, whether it's from a life insurance perspective or from a disability income perspective, and just help the advisors uncover situations and analyze current plans versus what they need and be able to provide a solution. Keep in mind, we don't have any ties to any one carrier. We're able to offer any kind of plans that are available in the marketplace. So that's an important point that we'll probably dive into a little bit more later.
That seems like a big kind of distinguishing factor of your group is you're essentially able to shop the market for clients, which is a huge value add over the long term.
Absolutely. It's with all the different companies out there, with all the different strategies that they have, it's quite a task to understand what makes sense here and what makes sense there. But again, we operate in a fiduciary capacity in terms of finding the best solution for the client.
That's great. Yeah. And could you just briefly, do advisors need to be licensed to work with you or to engage in kind of insurance, engagements with clients?
Great question. It comes up all the time. So do we need to be licensed? The answer is no. If you're not licensed, you can still engage with us and we can provide whatever kind of solutions need to be provided. However, if there is a revenue component to whatever solution we're providing, the only way that you can participate in that revenue component is to be licensed.
And how are variable annuities handled? I think, or just maybe annuities in general. Okay. I don't, are we recommending those on an ongoing basis, or are we kind of facilitating? What is kind of your kind of feel of the market on that?
So when I engage with an advisor regarding an annuity, it's going to typically be one of two ways. The first way is to say, I'll have an advisor bring an annuity to me and say, tell us about this annuity. Is it good? Is it bad? And it's typically going to be a deferred annuity. Sometimes it'll have guaranteed income benefits and that type of thing. One thing that we can do, if the rep is an MSEC rep, one thing they can do is to become the agent of record on it. So transfer it to the MSEC side with most carriers, not all of them. And then if you're not MSEC rep, we can most of the time we can be the agent of record on the insurance side. So that's one situation, is to review current annuities and help them understand what they're for, if they have a purpose, or if there's a better way to keep that money from paying taxes. That may be put it into a fee-based annuity. And the other type of annuity transaction that we're engaged with is typically when an advisor comes to us and says, okay, my client needs as much lifetime guaranteed income when they're X, let's say 65 or 70 or whatever the case may be. We need to research and find the best solution for guaranteed income for my client. So that would be the other, like we're creating a pension. So that's kind of the other way we look at it as well.
Sure.
We're able to provide those solutions.
Great. And what, in terms of policy reviews for clients or for advisors who are interfacing with clients, what does that kind of process look like? And you kind of maybe touched on it a little bit, your kind of consultative services that you offer.
Right.
But what does that really look like?
So from the policy review perspective, most of the time, I'm going to get an email from an advisor, or our team is going to get an email from an advisor. And keep in mind, I want to put an advertisement out there for right now. It's insurance@marinerwealthadvisors.com. Again, insurance@marinerwealthadvisors.com. Will get us direct access to the team that we have here, and to get right back to you. But so commonly, we'll get an email that comes in and says a client has an insurance policy. It's got some cash value or whatever. We're going to immediately respond and say we need to see, at first, at minimum, an annual statement, a recent annual statement on the policy. And then once we see that annual statement, we'll talk to the advisor and find out more about their situation to see if this insurance makes sense for them, and if it's part of their plan, if it's part of the income protection plan, or if we want to make it part of a asset protection plan, we can do that. But that's really the first step, is to get a statement of the policy, and then we'll have a discussion as to how it applies to their financial situation. From there, we may move on to get an in-force illustration to review what it's projected to be like in the future. So that's really the first step in the policy review. And after that, depending on the situation, but sometimes we can provide for you a narrative that we show, here's our opinion of this and this and this, based on the cash value, if it's a variable life or if it's something else. So it's just really whatever you want is what we can provide for you.
So once you kind of walked through that kind of introductory process, I guess, is there the ability to get quotes for clients or for advisors for clients?
Absolutely. And again, use that insurance@marinerwealthadvisors.com. And all we need to do is send the client's name, send their date of birth, send the state in which they reside. And if you know how much insurance they need, let us know what kind of quote you need and the duration you'd like it for. If it's a term policy, if it's a permanent policy, you probably ought to just send us an email saying that we've got a situation that we may need to look at permanent insurance on, and then we can dive deeper in that.
Ed, when you're dealing with clients, and I think one issue that comes up quite a bit is medical issues in clients. Do you have recommendations or best practices around that? Is it advisable for the advisor to approach you for a consultation, or is there kind of kind of walk through that a little bit? So
if we know that we're going to recommend some insurance, and the issue at that point in time is we have discussions about, well, is your client healthy? Well, on most permanent insurance plans, if there is a situation where the health is in question, they might have had cancer in the past, might have had heart issues in the past. It's our policy at Mariner to do the homework up front in terms of underwriting. So what we will do is we'll go out and we'll ask the client to sign a form that allows us to go out and get their medical records, so that once we get the medical records, we can have them reviewed by various underwriters to give us an opinion of where they will qualify for from a rating perspective. What this does is eliminates the need for them to take a full application and submit it to a carrier, and whatever information is found based upon that application goes into the Medical Information Bureau. So we circumvent that Medical Information Bureau issue. That's like a credit bureau for all the medical files that we have. But you can look that up if you want to. But so by finding out the ratings ahead of time, we don't have to concern ourselves with making an impact on that. So it's really a convenient factor convenience factor for the client, because we can understand where the situations are in terms of medical challenges to getting clients the coverage.
It's a huge advantage, essentially, enabling the client to get kind of a much deeper dive, a deeper analysis of their overall picture,
right?
As opposed to just working directly with an agent at a insurance firm or what have you.
Yeah, and the other advantage to that is once we get the file, we can go to multiple carriers and multiple access points for the product that we're going to use, and then we come back to the client and say, okay, company A and B and C, we're at a standard rate, but company D, we've got a preferred rate, and company E, we've got a preferred best rate. So I've seen ratings come across the board clear from a decline to a preferred best on certain situations. And that's why it's so important to be able to use an organization like us so that we can shop for the client and find them the best product for the situation.
And one of the topics I think we also touch on quite a bit, for advisors is long-term care insurance in general. Mm-hmm. So, and I kind of have two questions. I'll let you speak,
Sure.
in depth with your experience. But I think we see a lot of rate increases as being an issue, and I'm wondering if there are things you can do for that.
Okay.
And then also the potential for 1035 exchanges. What's the kind of work that goes on with that with the Insurance Solutions Group?
Right. So as it relates to traditional long-term care policies, and what he's referring to is rate increases. So we probably get in our department between 5 to 10 calls every week from advisors that have clients that are getting rate increases from their traditional long-term care policies. And just to give you a quick background, long-term care policies are priced like utilities. So as the carriers that issue the policies have claims that increase their costs, all they have to do is go to the state in which those policies are registered and ask for a rate increase. So it's pretty common to get a 30 to 40% rate increase, every 5 to 8 years on long-term care policies, and that's very frustrating for clients. But most of the time, depending on the client's facts and circumstances, it's just best to keep paying those increased premiums as long as they can afford it, because most of the coverage that was issued back a long time ago cannot be replicated now with the inflation benefits and the duration of benefits. So most of the time we do keep the policies going with the increased premiums, but there's certain circumstances where we'll lower them down and use one of the options that's provided by the carrier. As it relates to 1035 policies or 1035 exchanges, so the IRS lets you, if you have a gain, let's say you have a whole life policy that that somebody's 65 years old and they've put $150,000 in over their lifetime, and it's worth $300,000. And now they don't really have a need for the life insurance portion of it, but they would like to have the peace of mind, and they want to have the peace of mind for their family, knowing that if they ever need care, that they can go somewhere and get the care, or their family can go somewhere and get the money to provide the care. So one of the things we do, we're able to take that whole life policy with that gain in it that normally you'd pay taxes on if you cash it in, and we could transfer that to what I refer to as a hybrid long-term care policy, which provides a guaranteed cost recovery. So whatever premium dollars we put into the hybrid plan would come back to the family no matter what, either upon surrender or upon death, or whenever they need it for long-term care as well. So that's one strategy that we look at from a 1035 perspective. And that can be done on life insurance and on annuities.
Are there other strategies for clients who have life insurance policies that maybe they don't need anymore? Maybe they're able to self-insure. There's not really a need for some policy that they bought 35 years ago, or whatever the case may be. The
two strategies there with most life insurance that people bought a long time ago, you either have to die or you can cash it in or take a loan against it. That's the only way you can benefit from the policy. So one of the things that you can do now is you can upgrade your life insurance policy so that if, let's say, you have $1 million permanent policy, and we can likely change that depending on the health of the client and so forth, to change it so that they can now access the death benefit for long-term care coverage if they need it. So it just all they have to do is go back through underwriting, we do a 1035 exchange, and now voila, we've got access to the death benefit if they need it for long-term care. If not, it still remains a life insurance policy just like it was before.
Ed, we sometimes get questions from advisors on split dollar arrangements. Maybe could you kind of just give just an overview of essentially what they are,
okay,
and then kind of what are some of the strategies that you all see being implemented around those,
sure,
that you're able to essentially help with?
Yeah, so split dollar arrangements, typically we're going to see in one of two ways. Number one, we're going to see a current split dollar plan out there that likely hasn't been serviced properly over the last X amount of years. And we're able to come in and help basically forensically understand what happened and clarify this, and maybe terminate them or modify them in a way that benefits everybody from a tax perspective. The other way we use split dollar is commonly for estate planning, and that's the way we can leverage the gift taxability of a client that has a large estate. But we utilize split dollar on a frequent basis.
I think you just kind of touched on it. I think it's a nice segue. Around taxable estates, just in general, obviously our exemption amount has gone up markedly in the last few years, but still maybe some strategies there. Could you kind of touch on what those look like when we're dealing with higher net worth individuals who are going to have estate tax some kind of a concern?
Absolutely. So as you all know, as the current tax laws are today, December 31st, 2025 is the last day that we're going to have exemptions in the $22 million plus area. If the laws don't get extended as they are today, it'll drop back, it'll be cut in half again. But either way, in a lot of situations where we have clients that have a net worth of 20, 30, 40, $50 million and more, life insurance is an excellent tool in terms of creating liquidity outside the estate for a couple reasons. Number one, there's no taxes on the growth of the value in the policy. And number two, the benefits at death are completely tax-free. So, for example, if somebody has an irrevocable trust and they have assets in this irrevocable trust will not get another stepped-up cost basis at death. So, for the rest of the life of the grantor of that trust, the values may grow and grow and grow, but then at death, those values have to be recognized in terms of taxes in order to spend that money for the heirs. So by using life insurance outside of the estate, we're able to get a synthetic stepped-up basis at the death of the grantor by insuring the grantor in that irrevocable trust. And all along, we can do it with the same or similar investments that can grow over time as well.
So the challenge, I have to guess, is figuring out how much you actually need. Do you have a process for that in place, or is there some kind of an analysis that occurs that your team's able to facilitate?
Right. So in the design of estate plans regarding liquidity issues and so forth, we have a system that we can put together, and given the assumptions that we want to use for your client, we can show them how their estate's going to grow and what the impact of the taxes are, and an alternative strategy in terms of how to shift some money outside the estate so that we can get that growth outside of the estate. And as part of that, if the facts and circumstances are right, we would use life insurance there. And the life insurance benefits can be very meaningful because of the tax benefits of life insurance outside of the estate. But yeah, we do that all the time. We run plans for clients, and advisors and attorneys and accountants just love the way we do our plans and present their clients.
It really is a full service approach. It's great.
Absolutely.
Ed, I have just a few general thoughts to wrap up. Just to remind our viewers again, what's a good contact point for you or members of your team? So
the general contact point is insurance@marinerwealthadvisors.com, or you can always call me on the phone, or I'm ed.sims@marinerwealthadvisors. But anyway, it's myself. Jerry Clark is another consultant. We got Carrie Jackson and Debbie Russo to help you as well. So
the dream team.
Yeah, absolutely.
If you will. Yeah. The added caveat I'll add is that there's a lot of great resources for Ed and his group on the Advisor Toolkit. I certainly would encourage you to look at that. There's a tile essentially for insurance and risk management solutions. So lots of good marketing materials and white papers and whatnot for review and covering some of the topics we've addressed today.
Yeah. So we just really touched on it in a high level area, but A lot of times I'll come out to the offices and do a deep dive for an hour or so and get into real life examples and case studies of exactly what we do. And that's what tends to add a lot of value to your practice.
Ed, thanks again so much for stopping by. We appreciate it. By all means, if you have questions or concerns, don't hesitate to reach out. Ed, thank you again.
Thank you. I look forward to working with you.